Hello everyone, I am Trupti Pandya and today I will be teaching you Element of Account Standard 12 Part 2 Chapter 3 Final Account of a Company. In previous lecture we already completed up to objective of the prepare the financial account of company. Now today see money received against share warrants. Second, share application money pending allotment. And third, non-current liabilities. In non-current liabilities, first one, long-term borrowings. First, long-term borrowings shall be classified as first, bond debentures, second, term loans. In term loans also, two subdivisions are there, from banks and from other parties. C, deferred payments, otherwise liabilities. D, deposits. E, loans and advances from related parties. F, long-term maturities of financial lease obligations. G, other loan and advances. Second, borrowings shall be further be subclassified as a secured and unsecured loan. Third point, where loans and advances have been guaranteed by directors or others, the aggregate amount of such loans under each head shall be disclosed. Fourth point, bonds or debentures along with the rate of interest and particular of a reduction or conversion shall be stated in a descending order or of a maturity. 5 years, 6 years, whatever it is, a particular redemption period is there. Fifth, terms of a repayment of terms loan. Sixth one, particular of a default in repayment of loans and interest as on the balance sheet date. B, deferred tax liabilities. C, other long-term liabilities. Other long-term liabilities shall be classified as A, trade payment. B, others like provident fund, pension fund, gratuity fund, etc. D, long-term provisions. Fourth point, current liability. A, short-term borrowings. 1. Short-term borrowings shall be classified as A, loan payable on demand. A, from banks, from other parties. B, loans and advances from related parties. C, deposits. D, other loans and advances. Second point, borrowings shall further be subclassified as a secured and unsecured. Nature of a security shall be specified separately in each case. Third, where loans have been guaranteed by directors or others, the aggregate amount of such loans and advances. Fourth, period and amount of a default as on the balance sheet date in repayment of loans and interest shall be specified separately in each case. Trade payables. Other current liabilities. Other current liabilities shall be classified as for A, current maturity of long-term debt. B, current maturity of finance-based obligations. C, interest accrued but not due on borrowings. Interest is there but due on borrowings. D, interest accrued and due on borrowing. Here not due but here due. Income received in advance, unpaid dividend. G, application money received for allotment of securities and due for refund and interest accrued thereon. H, unpaid matured deposits and interest accrued thereon. I, unpaid matured debentures and interest accrued thereon. J, other payables. K, other like calls receivable in advance. Short-term provisions. Short-term provisions shall be classified as A, provision for employee benefit. B, other provisions like provision for tax, proposed dividend, provision for bad debt, etc. Now, assets. First, non-current asset. A, fixed asset. In fixed asset, first one, tangible assets. Tangible assets shall be classified as land, building, plant and equipments, furniture and fixtures, vehicles, office equipments, others, and leasehold assets. Now, intangible assets. Intangible assets shall be classified as a goodwill, brand, trademark, computer software, publishing rights, mining rights, copyrights and patents, receipts, formula and technical know-how, license and franchises, others. Capital work in process. Intangible assets under development. Non-current investment. Intangible assets shall be classified as A. Investment in property, investment in equity instrument, investment in preference share, investment in government and trust securities, investment in debenture and bonds, investment in mutual funds, investment in partnership firm, and other non-current investment. C. Deferred tax assets net. D. Long-term loans and advances. In D, first one, long-term loans and advances shall be classified as A. Capital advances, B. Loans and advances to related parties, C. Other loans and advances. Second, the above loans and advances shall also separately subclassified as A. Secured, B. Unsecured, C. Doubtful. E. Other non-current assets. Other non-current assets shall be classified as long-term trade receivable and others. Second, current asset. A. Current investments. Current investments shall be classified as A. Investments in equity instruments. B. Investments in preference shares. C. Investment in government and trust securities. D. Investment in debenture or bond. E. Investment in mutual funds. F. Investment in a partnership firm. G. Other investments, as example, short-term investment. And B. Inventories. Inventories shall be classified as A. Raw material, B. Work in progress, C. Finished goods, D. Stock in trade, E. Stores and spares, F. Loose tools, and G. Other goods in transit. Trade receivable. Trade receivables shall be classified as A. Debtor, B. Bills receivable. D. Cash and cash equivalents. Cash and cash equivalents shall be classified as A. Balance with banks, B. Check, draft or on hand, C. Cash on hand, D. Others. E. Short-term loans and advances. Loans and advances given for a period of less than 12 months shall be included in short-term loans and advances. F. Other current assets. Prepaid expenses, income due but not received, tax paid in advance, deferred revenue expenditure, or fictitious assets to be written off during 12 months after the date of a balance sheet. As example, debenture discount, advertisement, suspense account, etc. Contingent liabilities to the extent not provided for. Contingent liabilities shall be classified as A. Claims against the company not acknowledged as a debt. B. Guarantees given by the company. C. Unpaid calls on shares purchased as investments. D. Liabilities of incomplete contact. Not money received against a share warrant, share application money pending allotment, deferred tax liability and deferred tax asset, etc. are not expected to be asked in the exam in the question of a preparation of a balance sheet. These balances are mentioned here as they are given in the format of a balance sheet as per Schedule 3 of Company Act 2013. From the Profit and Loss Statement and General Instruction. Part 2 of Schedule 3 of the Companies Act 2013 gives form of a statement of a profit and loss. Profit and loss account of company must be prepared as per this format. Schedule 3 gives only vertical format. This form is as under: statement of profit and loss, name of company, profit and loss statement for the year ended, revenue from operations, sales. Second, other incomes. Third, total revenue 1 plus 2. Total of first and second we have to write here. Fourth, expenses, cost of material consumed, purchase of stock in trade, changes in inventories, work in progress, finished goods and stock in trade, employee benefit expense, financial cost, depreciation and amortization expense, other expenses, and total expense. Fifth, profit before exceptional, and extraordinary items and tax, 3 minus 4. Sixth one, exceptional items, 6. Seventh, profit before extraordinary items and tax, 5th minus 6. Eighth one, extraordinary items, 9th, profit before tax, 7 minus 8. And 10th one, tax expense, current tax and deferred tax. 11th one, profit loss for the period from continuing operations, 9th minus 10th. Afterward 12th, profit loss from discontinuing operations, 13, tax expense of discontinuing operations, 14, profit loss from discontinuing operations, 15, profit loss for the period 11 minus 14, and 16, earning per equity share, basic and diluted. General instructions for preparation of a statement of profit and loss. These instructions shall apply to the income and expenditure account in the similar manner as they apply to statement of profit and loss. Second, A. In respect of a company other than finance company, revenue from operations shall disclose separately in the notes revenue form. Sale of a product, sale of service, other operating revenues. B. In respect of a finance company, revenue from operations shall include revenue from interest and other financial services. Finance expenses. Finance cost shall be classified as A. Interest expense, B. Other borrowing costs, C. Applicable net gain loss on foreign currency transactions and translation. Fourth one, other income. Other income shall be classified as A. Interest income, B. Dividend income, C. Net gain loss on sale of investments, D. Other non-operating income, bad debt return. Fifth one, employee benefit expenses. Employee benefit expenses shall be classified as A. Salary and wages, B. Contribution to provident fund, C. Expense on employee stock option scheme, D. Staff welfare expenses. Now, finance cost. Interest paid and outstanding interest on loan, debenture, public deposit, bonds and bank overdrafts shall be shown as a finance cost. 7. Depreciation and amortization expense. Depreciation on fixed asset for current year, intangible asset written off, leasehold assets written off, and fictitious assets written off like research and development expenses, advertisement companion expenses, debenture discount, etc. shall be shown on depreciation and amortization expenses. 8th one, other expenses. Office and administrative expenses, selling and distribution expenses, audit fee, bad debt provision for bad debt for current year, loss on sale of assets, bank charges and commission, etc. shall be shown as other expenses. Not exceptional items, extraordinary items, deferred tax, profit or loss of continuing and discontinuing operations and earning per share is not expected in the question of a preparation of a statement of profit and loss, and hence this item will not be asked in the examination. These items are shown here because they are given in Schedule 3 of Companies Act 2013. It is not important for the examination purpose. Balance sheet and statement of profit and loss as per Schedule 3 of Company Act 2013 are given only for explanation. For the purpose of examination, balance sheet and statement of profit and loss and their schedule shown below are to be considered. Balance sheet, name of company, balance sheet as at, equity and liabilities, shareholders funds, share capital, revenue and surplus, non-current liability, long-term borrowing, other long-term liabilities, long-term provisions. Third, current liability, A. Short-term borrowing, B. Trade payable, C. Other current liability, D. Short-term provisions. Now assets. First, non-current asset, fixed asset, tangible assets, intangible asset. B. Non-current items, long-term loans and advances, other non-current asset. Current asset, current investment, inventories, trade receivable, cash and cash equivalents, short-term loan and advances, other current assets. Following information is expected to be studied as notes on head and subhead of a balance sheet. Share capital. Authorized share capital, equity share of rupees each, preference share of rupees each, issued share capital, equity share of rupees each, number of equity share and here rupees, number of preference share and here rupees, subscribed share capital. Afterward total we have to write here. Subscribed and fully paid up share, number of equity share and rupees each, number of preference share rupees each, and we have to write here. Subscribed but not fully paid up share capital, number of equity shares rupees each, rupees per share called up, less call in arrears, number of preference share rupees each, rupees per share called up minus call in arrears, forfeited shares account, and afterward we have to write here total. Now after reserve and surplus, surplus as per statement of profit and loss, less appropriation profit general reserve general reserve the dividend, and afterward outer column. Security premium, outer column, general reserve plus appropriations, and afterward we have to write outer column. Capital reserve, debenture redemption reserve, dividend equalization fund, reserve fund. Afterward, workers accident compensation fund, investment fluctuation reserve, a loss as per statement of profit and loss. If loss is there, then we have to write in bracket because it is loss. Long-term borrowing, debenture, long-term loan or term loan, bond, and public deposit. Fourth one, other long-term liabilities, premium on reduction of debenture, premium on reduction of preference share, total. Long-term provision, provident fund, gratuity fund, pension fund, workers profit sharing fund, and workers saving account, afterward total. Now sixth one, short-term borrowing, short-term loans for less than 12 months, bank overdraft, cash credit, and afterward total. Seventh one, trade payable, creditors, bills payable, and total. Other current liabilities, outstanding expenses, income received in advance, we have to write here. Unclaimed dividend, right here. Debenture and premium on redemption payable during next 12 months. Call in advance, advance received from customers, outstanding interest on debenture, and afterward total. Short-term provisions, provision for tax, proposed dividend, and afterward total. Assets, fixed asset, tangible, land and building, plant and machinery, furniture and fixture, vehicles, tools and equipments, leasehold asset, and afterward total. Fixed asset, intangible, goodwill, patent, trademark, copyright, license and software, franchisee, and total. Afterward, non-current investment. In non-current investment, there is a provident fund investment, debenture redemption fund investment, share of subsidiary company, share and debenture of other company for more than 12 months, fixed deposit with bank for more than 12 months, government security for more than 12 months, units of mutual funds for more than 12 months. And afterward total. Long-term loans and advances, loan to employee for more than 12 months. Custom deposit, telephone deposit, electricity deposit. 14, and afterward here we have to write the total. Other non-current asset, debenture discount to be written off after next 12 months. Advertisement companion expenditure to be written off after next 12 months. Research and development expenditure to be written off after next 12 months, and afterward total. Current investment, share and debenture of other company for less than 12 months. Marketable security for less than 12 months, government security for less than 12 months, unit of a mutual fund for less than 12 months. We have to write here total. Inventories, stock of raw material, we have to write here. Stock of a semi-finished goods, stock of finished goods, stock in trade, loose tools, spare parts, consumable stores, and goods in transit, and afterward we have to write here total. 17, Trade receivable, debtors and bills receivable total, cash and cash equivalents, cash on hand, bank balance, check and drafts on hand total. Short-term loans and advances, loan advances for less than 12 months, advances of suppliers for less than 12 months and total. Other current asset, prepaid expenses, income due but not received, advertisement companion expenditure to be written off during next 12 months, debenture discount to be written off during next 12 months, research and development expenditure to be written off during next 12 months and total. Statement of a profit and loss for the purpose of examination is to be prepared containing following details: name of company, statement of profit and loss for the year ending this date. Here write the name of the company. Particular revenue from operations, sales, other incomes, and here we have to write the total 1 plus 2. Expenses, purchase, changes in stock, direct expense, employee benefit expense, final cost, depreciation and amortization and other expense, and here we have to write the total. Profit before tax 3 minus 4. Sixth one, provision for tax. Seventh, profit after tax. Fifth, minus 6. Following particulars of revenue and expenses on the statement of profit and loss are to be considered for the purpose of examination. Particulars: revenue from operation, sales minus sales return, and afterward we have to write the total. Other incomes, interest and dividend received, bad debt recovered, profit on sale of asset total, net purchase, total purchase minus purchase return. Here we have to write change in stock, opening stock minus closing stock, direct expense, wages, carriage inward total, employee benefit expense, salary, bonus, commission, contribution, provident fund total, final cost, interest on bond on debenture, interest on loan on public deposit, interest on bank overdraft, interest on short term loan total. Afterward, depreciation and amortization. Depreciation on fixed asset, goodwill, patent, trademark, intangible asset and written off. Debenture discount written off. Advertisement companion expense written off. Research and development expense written off and total. Other expenses, postage, stationery, rent, audit fee, office and administrative expenses, sales expense, bad debt written off. So this way, all the expenses, depreciation and other expenses we have to write in a profit and loss account. This statement is only important for the examination purpose from the here. Other information as per the table 2013 as per the company law. And here we complete our all the theory portion. Thank you very much.